The stock market rising on a better-than-expected January jobs report as investors look to extend last month's strong performance on Wall Street. Joining us to discuss this, Oxbow Advisors founder and managing partner Ted Oakley. Ted, it's good to see you again. Were you surprised by the numbers we got this morning?
Well, I was a little surprised, Adam. I thought they were higher than expected. I was surprised more at the construction number. That was a big part of that. And I'm not certain how that came in, but that's what really pushed it in there.
So let's talk about your perception of how the Federal Reserve takes a look at this jobs report, because you could say they're in an oops kind of position. If the economy's strong, why did you stop raising interest rates? And then we get these jobs numbers. But if you stopped raising interest rates because the economy is not so strong, are we headed for the slowdown, eventual recession? What do you think?
You're exactly right. I think the biggest problem on the street right now, and we said this back in August and September, everybody kept talking about the rates going up. And we said, well, as soon as the market breaks, they'll probably cut and run, which they did. And they gave really mixed signals on all of this. They're back, they're out, 6 weeks ago saying what they were going to do. They turned on both sides of it. And so I really think they have people confused on that. Now, we particularly think rates will go lower no matter what. But I think that's what the public, and particularly on Wall Street, is confused on that.
Well, let me ask you this. Are you overly pessimistic? I think you told us that your cash levels are at 5-year highs right now. When will you redeploy that cash?
We'll redeploy it when we find really good values in the companies we buy. We buy single companies. We found some in December, by the way, that we put some money to work. But I feel like that what we'll get in this year, and it has to go back with this wage thing, is your profit margins are going to shrink. And that's going to be one of the reasons for that. It's going to be that wages are going to go up, which will probably have an impact on multiples, which we're looking for a lower price. It all fits together in the late cycle.
Ted, Brian Brenberg here. For so long, we've been questioning whether we're going to see growth in 2019. It's starting to feel like the growth story's back on the table here. You got a great jobs number, both November, December, and January. You've got the Fed slowing down. Things seem to be lining up for a better than expected 2019 in terms of growth. Do you buy that, or are you still pretty suspicious about that happening?
Well, we're not buying that, because what we're thinking is that as you go into the second quarter, you'll start to see more signs that the economy is not as strong as people thought it was. If you look at all the beige books numbers that have come out, and if you look at a lot of the leading indicators, they're still negative. And when that's happening, it's hard for you to think that over the next 6 months that the economy is going to really take off here.
Let me ask you this, Ted, as we start to wrap up. I know that you're concerned about hitting some lower lows. Right now, the S&P 500, 2711. Back in December, the low was around, I forget the exact number, in the 2400s. Do you think we could actually test that within the next quarter?
I do. Would not be surprised at all if in the second and third quarter we don't go toward that and below that, and possibly surprise people on numbers that come from that.
Ted Oakley, cash is king is what I hear you saying right now, but thank you very much. We're going to talk about this with the panel. Is Ted onto something? Do you really think, as Ted does, that we could be testing that 2400 low with the S&P 500?
Well, I think he was onto something looking back at December when everyone was freaked out about the market and that he was putting money to work. And you had to be really brave to do that, to start buying opportunities when everyone thought, oh, this is it. We're in a bear market. We're not going up. And look, now we've erased the gains. Now we've had a strong January. People seem upbeat about going forward in February. That's on what the Fed is doing, more accommodative monetary policy, the China trade optimism there. You're having a decent earnings season so far. So I think there's a lot to be optimistic about.